Hello friends, welcome to our channel SNK and Company. Let us begin with this week's updates under the Income Tax Act, GST law, and other corporate laws. We start with the Income Tax Act. The Mumbai Tribunal, in the case of Hindustan Unilever Limited versus Deputy Commissioner of Income Tax, held that compensation received by the SSC for premature termination of the right to use the Savlon trademark constituted a revenue receipt. The tribunal observed that the SSC had not been granted an enduring monopoly right over the trademark, and the compensation was received in the ordinary course of business without affecting the SSC's profit-making structure. Accordingly, the amount was held to be taxable as business income. In another important ruling, the Bombay High Court, in the case of Suntech Realty Limited versus Deputy Commissioner of Income Tax, held that reassessment proceedings initiated in the name of a non-existent entity are invalid. In this case, reassessment proceedings were initiated against Starlight LLP, which during the course of proceedings had converted into a private limited company and subsequently amalgamated into the petitioner company. The court held that passing an order under Section 148 AD and issuing notice under Section 148 in the name of the erstwhile LLP, which had ceased to exist, was legally unsustainable. The Mumbai Tribunal, in the case of Assistant Commissioner of Income Tax versus Freightbridge Logistics Private Limited, dealt with rejection of books of account and estimation of profits. The SSC, engaged in logistics business, had furnished confirmations and supporting documents for its trade creditors. The tribunal noted that major vendors were non-resident shipping lines governed by specific tax provisions and whose transactions were independently verifiable. It held that rejection of books in estimation of profit at 8% of turnover merely because such vendors had filed nil income returns was arbitrary. Accordingly, the addition was deleted. In the case of Sumit H. Chandani versus Deputy Commissioner of Income Tax, the Ahmedabad Tribunal examined eligibility of exemption under Section 54F. The tribunal held that only the amount actually invested or irrevocably committed towards purchase or construction of a new residential house qualifies for exemption. Where the SSC failed to provide evidence supporting the entire amount claimed, the deduction was required to be restricted proportionately to the actual investment made. The Delhi Tribunal, in the case of Oracle Systems Corporation versus Additional Director of Income Tax, dealt with taxation of royalty income. The SSC had offered to tax only 56% of revenue transfers received from its Indian subsidiary as royalty under a software support agreement. The assessing officer sought to tax the entire compensation, including revenue from global deals, as royalty. The tribunal held that only amounts contractually receivable under the agreement could be taxed as royalty. An addition of notional royalty relating to global deals was not sustainable. Now we move to updates under GST law. The AAAR Odisha held that where an applicant sought an advance ruling on GST leviability relating to stamp duty and registration charges for a mining lease, but audit proceedings and a demand notice under Section 73 were already pending on the same issue, the application was barred under Section 98(2) of the CGST Act and therefore not maintainable. The AAR Tamil Nadu held that where an applicant was not engaged in the regular business of dealing in second-hand goods, the margin scheme for valuation would not be available. In this case, the applicant sold a used car previously purchased for the proprietor's personal use. The authority held that since the applicant was not a dealer in second-hand goods in the ordinary course of business, GST was payable on the full value of consideration. The Madras High Court dealt with duplication of assessment orders in GST proceedings. The court observed that two separate orders had been passed for the same period on the identical issue of mismatch between Form GSTR-2A and Form GSTR-3B, resulting in duplication and potential double taxation. The court held that both orders were unsustainable in law and set them aside, remanding the matter back to the authority for fresh consideration, subject to payment of 25% of the disputed tax and grant of an opportunity of hearing. Now we discuss updates under other corporate and enforcement laws. In the case of Asif Hanif Thara versus Deputy Director, Directorate of Enforcement, FEMA, New Delhi held that where proceedings under the Prevention of Money Laundering Act, PMLA, were initiated based on a scheduled offense, and the High Court subsequently quashed the entire scheduled offense case, the foundation of the PMLA proceedings ceased to exist. Consequently, the proceedings under PMLA could not continue, and the seized properties, including gold, cash, and a digital device, were required to be released. In another matter, FEMA, New Delhi, in the case of Orchid Pharma Limited versus Special Director, Directorate of Enforcement, held that penalty imposed under FEMA could not be sustained where the company had already undergone Corporate Insolvency Resolution Process, CIRP, and a resolution plan had been approved by the National Company Law Tribunal and subsequently upheld by the Supreme Court. Since the approved resolution plan had been implemented as part of corporate revival, the penalty order passed thereafter was held unsustainable. These were the key updates under income tax, GST, and corporate laws for this week. Stay connected for more updates on important developments in tax and corporate law.